Hello and welcome to this special CNBC Africa broadcast of a dialogue, an intimate dialogue with one of the most notable agents of change in Nigeria and, of course, indeed, the African continent. I'm Wole Famurewa, and thanks for joining us. So over the next 30 minutes, we will be speaking to the Central Bank Governor of Nigeria, Sanusi, Lamido Sanusi, and getting some insight into what drives him, looking back at his tenure over the last 4.5 years. Indeed, the Central Bank Governor has already indicated that he is looking to step down come May 2014, and it should be a very interesting and engaging dialogue. Central Governor Sanusi Lamido Sanusi, thank you very much for joining us. It's always a pleasure to speak to you, and I want to really start by reflecting at your tenure over the last 4.5 years. It has indeed been very interesting, tumultuous, a big challenge for you, I imagine. But if you can just reflect and take us back to the day you took office, and maybe even before that, when you got the call from the president to serve as central bank governor, how overwhelming was that challenge for you?
Well, when you go back to 2009, it was, I suppose, the worst time for anyone to be offered that job. It was taken for me at a time when there was a very high probability of failure because a lot had gone wrong. A lot have gone wrong internationally with the international financial markets. This was shortly after the collapse of Lehman Brothers. All the good days were gone. Oil had crashed from $147 a barrel to under $40 a barrel. Our reserves had crashed. The exchange rate had collapsed overnight by 25%. I think a few weeks before I became governor, official rate was 145. The Naira was actually trading about 189, 190. That was how much instability you had. Inflation was over 13%. It had just come down from about 15%. So every single thing, banking system, exchange rates, inflation, reserves, and these were the 4 key areas I was supposed to manage, were simply, everything was simply out of whack. And there were, of course, domestic issues. As you know, there had been a consolidation. Some banks had become big banks, having raised bubble capital, and they'd taken huge risks. There were huge governance issues. We didn't know the extent, but we did know that there was a big problem. So
did you feel at all overwhelmed? Did you think it was just an honor, or what was the emotion that you felt?
There were many considerations. First of all, I had just taken over CEO of First Bank. And at that time, we were in very serious conversation on a merger with ETI. And we had very clear plans for turning First Bank into a bank that would compete with a Stanbic or a First Rand. So I did feel that I had been given an opportunity to do something really big in the commercial banking space. And we had started making a lot of progress domestically. So there was a sense that maybe I needed to complete that before and achieve something there in terms of what my vision was before moving on. There was the fear of going into a job that clearly looked like in itself overwhelming, and we depended on political support for the kind of changes that needed to be made, and I wasn't sure if I would get them. But at times like that, you need friends. And I always thank God for somebody who would have been here, but who's dead, Tayo Aderinokun. He was the MD of GT Bank. He was the only bank CEO that I called at that time. And I said, this is my situation. I'm being considered for governor of Central Bank. I really don't think it's something I want to do. And he talked to me and said, you know, if you don't do this and you're offered, you don't have the right to complain about things not being done. You know, and there is need for change. There is need for someone to address these issues. We cannot continue pretending that there are no problems and you will have all our support. You know, he was like an elder brother I've known since 1980. So that conversation basically encouraged me, but also made me realize the burden, the huge burden that was on my shoulders. But that was, I think, what was the tipping point ultimately for that decision.
And of course, after you stepped into office, you had to take several big decisions, tough decisions. I mean, we can just begin to roll them out. You had to decide on sacking bank CEOs at some point. You had to take decisions around monetary policy. So you've had to take quite a long list of very difficult decisions given the crisis that we had to deal with at the time. What would you say was your toughest decision over the last 4.5 years?
I still think the most difficult decision was that first decision to remove CEOs and ExCo and disclose the full extent of the banking system problem, because it was a very big risk. Okay, but it was also a decision I could take because I had prepared myself for it. The conversation around the possibility of being appointed governor started in February. Okay, I knew from February that I was being considered. I didn't know that I was going to be, but I knew that was a possibility. And one of the things I do is I never accept a job I'm not prepared for. So I was very fortunate. At that time, there was a lady working, it's always ladies, there was a lady working for the British High Commission in Abuja, who was a good friend of mine, who had done her doctorate thesis on the Asian financial crisis. So between February and May, I took her PhD thesis. I took all her research papers. By the time I became governor in Central Bank, I knew exactly how Malaysia, Indonesia, Korea had solved their financial crisis. And I'd settled on the Malaysian model. So I knew that you would have to disclose and not pretend. You would have to put in the capital. You'd have to recapitalize the banks, and you'd have to restore stability first and then deal with the costs later. And if you remember, Mahathir had to take very difficult decisions. So a lot of what we did with AMCON, that was basically the Dana Harta and Dana Modal in Indonesia. The Indonesians had to remove entire boards. I mean, it was my decision, my view was do not reinvent the wheel. Right. Okay, somebody had done it, it had worked. Okay, how did they do it? You would make a few mistakes, but hopefully if you try to stick to a plan, okay, and a clear vision, you would get there. And this was, I think, what helped.
Over the last 4.5 years, you've done so much. You've led the reform of the entire banking sector. You've stabilized it. What would you say, in your view, is your greatest achievement?
You know, I think when you put everything together, from banking reforms to economic policy, I think the single greatest achievement is that we have shown what it really means to have an independent central bank. And I think it's important because everything revolves around that. The credibility, do the markets believe you? Are you able to push policy? If you say to the bank CEOs, I want this done, and if you don't do this, this is going to happen, are they going to believe you? I think just the ability to show that you will set a clear direction. Okay, for example, when we did the bridge banks, we set deadlines. We told people there was a hard deadline of September. The boards didn't believe us. They woke up one day and found that we'd taken over the banks. You know, so the fact that you're able to make those commitments, whether it's on inflation or on banking reforms or on reserves, and because people have to believe that you are able to keep up to those commitments. No matter how good really you are as central bank governor, no matter how well you do the work technically, if people don't believe you're sufficiently independent, you're not going to have an impact. Okay.
You've clearly spoken very loudly about your views, and it's really been underpinned by that character of courage. Where do you get that from? Because I recall that Forbes Africa, for instance, labeled you a banker unafraid when they gave you that award a few years ago.
Well, I don't know. I think, for me, I've never really known what it is to be afraid of anyone. And that's the truth. Partly because, I mean, whatever is going to happen to you will happen to you. And it happens to everybody. I mean, you can die a brave man, or you can die a coward. You will still die. You know, you can be thrown out of a job for doing the right thing. You can be thrown out for doing the wrong thing. You can be thrown out for doing nothing. If you're going to lose your job, you're going to lose your job. So, the fragility of life is something we live with. Sickness, death, loss of status. But there are things you can't control. I can't control what happens to me. I can't control what people do to me. I can control what I do.
Right.
Okay. And secondly, I think we overestimate the power of the forces that we confront. They thrive on building some myth around themselves of invincibility.
Governor, I really have to take a break. I really want us to continue to explore that philosophy. We've of course been speaking with Central Bank Governor Sanusi Lamido Sanusi at the Bankers Committee retreat in Calabar. After this break, we'll continue our conversation with the Central Bank Governor. Welcome back to our conversation with Sanusi Lamido Sanusi, the Central Bank Governor of Nigeria. He's looking to buy out in another 6 months. We're getting some perspective on his tenure and what next for him. Thank you so much for joining us. And before the break, you were sharing your philosophy around your courage. And can you just continue on that point?
Yes, I'm saying that people basically overestimate these forces, and they're afraid of really things they shouldn't be afraid of. If you look at the entire cabals or networks, okay, that seem to dominate of vested interests, in Nigeria at least, their arsenal is limited to two things, and two things only. They'll try to bribe you. If they can't bribe you, they try to frighten you.
But those threats, are they not real? Over your tenure, for instance, have you ever felt threatened physically? Did you feel your life was in danger?
No, I think I've considered more a threat to people than they to me. I mean, I've never placed myself in a position where anybody can threaten.
Even in August 2009, right after that.
I mean, look, in August 2009, I actually called the bank CEOs myself. I didn't send letters. I called them and faced them, handed them the letters and said, I'm removing you.
How difficult was that for you? Because these were your colleagues. I mean, just a few months ago you were...
Before then, I mean, I had spent 2 weeks, obviously, reflecting, thinking, praying, thinking of all the things that could go wrong, putting in place whatever we could humanly put in place to make sure that we had an answer to things going wrong. But in terms of facing them and taking that decision, I thought was important. And by the time you actually face someone and give him a letter and say you're fired, okay, and tell them that you can't go back to that institution if you're removed, and you already are in a position where they are on the back foot. And the next thing was, I mean, people don't understand why we publish the names of debtors. I published the names because those people, these were very rich people who had borrowed billions of naira from banks, who had not paid, and who would be the first to go to the president and the governors and the National Assembly and say, this man is killing the banking industry, because that is, they also live on blackmail. By the time I published the names of the companies, they lost that ground. You can't walk up to the president and tell him to stop the central bank governor when you've borrowed 200 billion naira from the banks and it's bad loans. So they all went into hiding, and we stopped them from leaving. We stopped them from traveling out of the country. We published their names and sent EFCC after them. The idea at every point in time is let them feel threatened. Okay, let them feel they were the hunter, because they were the bad guys here, who were just trying to recover depositors' money. So why should I allow anyone who borrowed money and brought down a bank to threaten me? Okay, so the entire process was to make sure that they didn't even have the time to do that.
All right, let's reflect a bit on leadership in Nigeria. You've received so many accolades in terms of your leadership and how you have driven change in Nigeria's banking sector. And over the last 5 years, how would you describe the changes you're seeing in terms of the leadership we're seeing, not necessarily just political leadership or even business leadership? Does it give you hope for the future of Nigeria?
I think so, but more important, I think, wider Africa. I think there's been much more progress in a number of countries in Africa. I look at a lot of stuff that happened in Ethiopia under Meles. I look at Rwanda under Kagame. I look at the work that's been done in Botswana. I look at Côte d'Ivoire after the war with Ouattara. I look at some of the steps taken by the president in Senegal. So we do have, and Conte in Guinea, we do have an increasing number of African heads of state in small countries that are becoming the benchmark, and it gives hope. Okay, we've got in the business side. Obviously, we have Aliko Dangote, who has transformed the perception of African business. We've got radical new thinking in government. The power reforms, the privatization of the power sector in Nigeria is a benchmark for power privatizations. I mean, this is what all the experts that have looked at these things have said. The thinking around agricultural transformation and value chains is really transformational if it's followed through and implemented. So there are within this country and outside good examples of hope for the future. But what's important, obviously, is to have clear thinking and to be able to follow through on that thinking.
We have in the room today the business leaders, particularly in the banking sector, that will be taking the reforms to the next phase. Since you've decided to bow out, what, in your view, should be their priorities going forward? We've seen a lot of institutional change, and we've seen a lot more collaboration in the sector. I think that's a very positive thing. But what should be the next focus for this group?
I think the key is to continue along the path that we've started, that we've charted. What is important with something like the central bank is to have the institution and to have the individual. When an institution is not just about the Central Bank Act or BOFIA or the building. It's about all the arrangements that help the central bank do its work. Through the Bankers Committee, for example, we have institutionalized a process of collaboration, of cooperation, of communication, of working together and leveraging the strengths and the tremendous resources of the banking industry to achieve our goals of central banking in a developing economy and marry that with their goals of making profits for their shareholders, but also allow them to make banking what it is. Because for me, the financial system has to go back to its raison d'etre, which is intermediation of resources into the real economy. We're not there yet.
Are you 100% convinced that we're on that path now?
I think we are. Once people buy into the argument and are willing to not to be intellectually lazy. There's a lot of intellectual laziness. It's very easy to make money trading on shares. It's very easy to make money trading on commodities. It's a bit more difficult to think about how you can actually change the structures around you, change the economy around you so that you can make money while creating jobs, while producing goods, while helping in economic diversification. Right. I think we've gone through that, and I think everybody in the Bankers Committee and everybody on the Committee of Governors has that mindset. Right.
Governor, very quickly, if you can just touch on monetary policy a little bit, because that's something that really concerns a lot of, particularly international investors, more so because you've decided to bow out. The stability of the views that you've, of course, led at the MPC. How institutionalized would you say the MPC structure is today?
You know, I've always believed that the most powerful tool of leadership is the ability to convey your vision and to get a buy-in. What we've done with the Monetary Policy Committee is that we've been able to let everybody understand the importance of price stability. And I've just said it, for me, it's not about foreign investors. Yes, it's important because if you don't have the foreign investors, especially if you don't have fiscal savings, you're not going to have the flows. If you don't have the flows, you're not going to have exchange rate stability, and that feeds into inflation. But why is inflation important? I've just told you why it's important to me and why it should be important to anybody who sits on MPC. If inflation goes to 20%, it's not so much the foreign investor that's the concern. It is the 100 and something million Nigerians living on less than $2 a day who you have suddenly impoverished by printing too much money or being accommodating of loose fiscal stance. So for me, there is an ideological, it's funny, people call me a hawk and they see inflation targeting as a right-wing, market-friendly issue. For me, it's an extremely left-wing ideological position because it protects the poor. They're the ones that suffer most from inflation. So I think once people begin to understand the value in what they're doing, You're not bringing inflation down because the IMF will be happy or the World Bank. I don't care about what the IMF says. I don't care what these guys are here to make money. I mean, there's nothing wrong with it. The investors are here, they invest in Nigerian capital market. They're looking at numbers, technical, fundamental analysis, how much money am I going to make? They really don't care about if people are going to be poor while they're doing that, unless it's going to help them make money, more money to get them rich. Yeah. Now, but if we need them to protect the poor, then we've got to basically protect their interests. So we protect the investors, we protect stability, we protect the capital markets, not because we want the 1% of Nigerians who own shares to be rich, but because without that stability, the 100 million are going to suffer, and they're going to suffer much more than these guys. A 20% loss in income is nothing to the CEOs in this room, okay? But it is a lot to someone living on less than $2 a day.
All right, Governor, I want to begin to wrap up now, and we really must touch the second term and why that is not an option for you. You've said quite clearly that you're bowing out, and you've announced it for a while. But is there any more to this than simply the fact that you feel you've ticked all the boxes? Because many will suggest that there are quite a few more boxes to be ticked. Nigeria is going into a phase now where there's so much uncertainty on in the global scene that could impact this economy.
You know, we're all, in a sense, prisoners of background and prisoners of things that are not on CV. In 1975, my father was appointed permanent secretary of the Ministry of External Affairs. He was then ambassador in China. He was 45, and he accepted on the condition that he would not serve for more than 2 years. I never understood why he did that. Now, he ended up serving 3 because Murtala Mohammed died and he had to stay with Obasanjo, so he served for 3 years. But later in life, I came to see the benefit. Those 3 years were the years in which he got the independence of Mozambique, the independence of Angola, set up the frontline states, and started the movement against apartheid. Now for him, and those were the golden years of Nigerian foreign policy. For him, those 3 years were far more valuable than spending 10 years as PAMSEC. Until his death, he could say he was part of the process that led to the liberation of Southern Africa. And what that gave me is a sense that it is never how many years you spend in a job. It's what you do. And for me, I think just to look back and say, I met a third of the banking industry about to collapse. We saved it. In my tenure as governor, not a single Nigerian or foreign depositor or creditor lost money in Nigerian bank. We've brought inflation down from 15 to 7%. We've built up reserves. We've started financial inclusion. We're getting banks to lend to agriculture. We've started mobile banking. We've done Islamic banking. I mean, for me, the boxes I have ticked, I look at it and say, well, what more can one hope to achieve?
Can I suggest one to you? Can I suggest that 2014 being a potentially very difficult year for Nigeria, given the impact of tapering and what it will mean for emerging markets, given the stress that we may see on the fiscal side, we need the leadership to drive monetary policy in the right way and, of course, to make sure that the sector is stable. So let me suggest to you, if I wonder if this has happened already, if the president were to call you today and say, Sanusi, Lamido Sanusi, I would like you to run for a second term.
I won't speculate on that. I don't speculate because I didn't speculate first time. But you know, when people talk about this second term or whatever, maybe I have one more leadership test that I want for myself. Maybe I want to leave and actually see if I have been successful in building the institution I wanted to build. Maybe I want to leave and see if the central bank and the bankers committee will continue. Maybe that is the test I want.
All right, so fair point there. But what next for you? There are many possibilities. Many have suggested politics. Many have suggested humanitarian work. Some have suggested an international job. Maybe going back to the private sector. If you were to speculate, where would it likely be?
No, the private sector is never something I want to be. I mean, I was in banking, but I really, I mean, I can tell you what is on the table. Certainly, from June to September, I'll be in France polishing up my French in Bordeaux. I do have an offer to accept a visiting professorship at CNSPO at the University of Bordeaux, so there is that possibility. I do have an offer to study Mandarin in the University of Beijing and also study Chinese economics. I think I'll probably do French, do Mandarin, do the visiting professorship, and then one possibility that I would like is to see how we can set up a really first-class think tank on public policy in Africa. Something that would compete with the Lee Kuan Yew Institute. For me, I think this is the biggest deficit in Africa is a deficit in public policy. You've got everything. Look at this country. We've got the resources. We've got the human beings. We've got the climate. We've got the population, the demographics. Everybody talks about the great potentials of this country. And I think there's something I've learned in Abuja, is that if you, and with this Bankers Committee process, for example, I mean, if you actually sit down and front load all the work by thinking through and articulating policy and implementing, there's no limit to what you can achieve. So I'm interested in public policy in Africa, not just in Nigeria, and I would like to see if in some way I can make an intellectual contribution that will be taken by policymakers and will ultimately change the lives of people in poverty.
Well, best wishes as you make that move. And over the next 6 months, I imagine that the market will continue to speculate as to what next, but at least we'll continue to enjoy that what you've brought in terms of the dynamism of monetary policy and how that is managed. Thank you very much. We've been speaking to the Central Bank Governor of Nigeria, Sanusi, Lamido Sanusi, talking us through his tenure and what next. It's been very interesting and engaging. He's also suggested his next steps, and it'll be interesting to see what happens next. You've been watching a very special presentation from CNBC Africa. From me, Wole Famurewa. It's goodbye.